the UAE and Saudi Arabia both promised that if there is any shortage or, in supply of the market, they will make up for any shortage. But at the same time, at the upcoming open meeting in June, we've been hearing from officials so far that there is no need to take immediate action because there is no current shortage in the market. The sanctions on Iran will take effect in about 6 months' time. So it'll take some time for us to see the shortage in order for them to react. And traditionally, we've seen that OPEC does not react proactively. It's more of a reactive response. Of course, they're aware that there might be a shortage in supply, and that's why we saw the statements from especially the Saudi energy ministry that they will be happy and able to supply the market if needed.
Now, Amena, you've been chasing these oil ministers, as I have for years now. And of course, one of the big questions going forward is really, about geopolitical risk here and what that's going to mean for these markets. Of course, what we're seeing in Israel today and yesterday and the day before, a lot of violence there. But that doesn't necessarily, of course, impact markets, but it can impact sentiment. What's your take there? Because, of course, Saudi Arabia, we just mentioned, is going to hold this emergency meeting.
Sure. I mean, geopolitical risk in general, we've seen escalate in the region quite a lot because of the conflict we're seeing in Gaza, but as well because of the sanctions coming up, and we've seen the conflict in Yemen. But the indications that I've gotten so far from OPEC officials that they will not react to any fluctuation in prices. It's rather they look at the fundamentals in the market and the balance between supply and demand, and they will react accordingly to that. But just based on a fluctuation on a daily basis or a weekly basis, if we get a spike, don't expect a surge or a change in the OPEC policy due to a sudden spike in prices. They rather wait until the end of the year and see the average price than react too hastily.
It was interesting hearing from the UAE's oil minister over the weekend. We were attending that ADNOC conference together, and he was basically saying that nobody's anticipating that prices would go up to $100 a barrel. Again, it was talking about, of course, the need, obviously, in these Gulf Arab states when it comes to their economies for these higher oil prices. It certainly helps things along. But in terms of what's happening more broadly in the region, I think it's interesting to note that there were Iraqi elections over the last couple of days. That outcome there remains slightly uncertain, of course, with Muqtada al-Sadr taking most of the votes. A lot of questions over what that will mean for the stability of that country. Are you hearing anything from your sources in terms of what that might mean down the road for Iraq's participation as a member? Well,
Iraq, we've seen from their numbers that they're still, according at least to the secondary sources, that they're over producing their quota by a little more than they should. It's still uncertain at this point what the elections would mean in terms of production in the future. But you mentioned the targeting of prices. I mean, the UAE energy minister clearly said that the organization OPEC and OPEC states do not target prices. They are not focusing on targeting a certain price level. They're looking for the stability and the balance in the market. So, of course, higher prices keep these economies at in better shape, but it doesn't mean that they are actively targeting a higher oil price.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.